This is Al Brooks, and this is my price action trading course. The current module is about triangles. Here's a list of common reversal patterns, and I'm going through modules treating each of the reversal patterns one by one, and this current module is about triangles. What is a triangle? For me, it's any sideways move with 3 pushes up or down. Sometimes it has both 3 pushes up and 3 pushes down. It's a type of channel. You can draw a line above and a line below. Triangles can be contracting, they can be expanding, they can be ascending, they can be descending, and if they're sloped sufficiently, traders usually call them wedges instead of triangles. Triangles are a type of tight trading range, a trading range where the the top to the bottom of the range is very tight, and there are multiple reversals in it. And like all trading ranges, a triangle is a magnet, so they're very often final flags. In other words, the breakout usually fails within 5 or 10 bars. The breakout in either direction. The market usually comes back to test the triangle, and sometimes even reverses. Slightly a greater probability of a with trend breakout. So if you have a triangle and a bull trend, a triangle is a pretty neutral pattern, a breakout mode pattern, but slightly greater chance of it having a bull breakout. But like I said right here, it can end up being the final flag of the bull trend and come back into the bull trend, come back into the triangle, and continue down further, leading to a reversal. Again, any trading range, such as a triangle, is a magnet, so breakouts usually fail and come back to test the trading range, and they're often the final flag of trends. Triangles can be big, they can be small. They can be as small as 2 inside bars, an II pattern, an III pattern. Both of those should be thought of as triangles, and if you look on a small enough time frame chart, you'll usually discover that they are small triangles. Okay, as soon as you see 3 pushes up or down, it's a triangle. 1 push up, 2 pushes up, 3 pushes up, it's a triangle. And yes, it's occurring in a bull trend, but the breakout can be in either direction. Here we got a small upside breakout of the channel. Remember, a triangle is a channel, and then a reversal down. So traders will see this upside breakout, and they'll see the failure, and they'll look to short below it, even though we're in a bull trend. So here we have a triangle top, a triangle acting as a reversal pattern. The market went down for about 10 bars and then came back up in a test of the triangle. Most triangle breakouts fail and come back to test the triangle within about 5 or 10 bars. Again, any 3 push pattern is a triangle. The market went up on bar 1, it went down and up on bar 2, so a second push up, and then a third push up starting with this bar and ending up here. So that's a small triangle and a potential reversal pattern. It had a downside breakout far enough down for at least a scalp. I probably would not short that given how strong this bull trend was. I would only look to buy. Here are 3 more pushes. Up here 1 and then down, up here 2 and then down, and up here 3. And 3 broke above the top of the trend channel line, so it could lead to a reversal down. This is also a small lower high major trend reversal following a bigger higher high major trend reversal. Bull trend, here's a trend line break, test of the moving average, higher high major trend reversal, short here, and then a lower high, and the lower high came in the form of a small double top. So that's a reasonable swing short. A lot of times these small double tops look very unimportant when they're coming, but if you're aware of the possibility that they are a lower high major trend reversal after a higher high major trend reversal, you should take the short looking for a swing down. Even if the probability is only 40%, the reward is at least twice the size of the risk, and that gives it a favorable trader's equation. Here we have a bear trend and then 3 pushes down, and 3 pushes down means it's a triangle. There are also 3 pushes up, so you can call it a triangle based on this 3rd push up, or more convincingly a better shaped triangle after this 3rd push down. Did not quite reach the bottom of the channel below, and that doesn't matter. It's still reversed up, and I think it's a reasonable reversal pattern. Again, bear trend, trend line break, lots of sideways price action. So this is a higher low major trend reversal. These two bottoms are basically a double bottom, even though they're not perfect. So this is basically a double bottom bull flag, forming a double bottom for the higher low major trend reversal after well, that's what it is. It's a higher low major trend reversal in the form of a double bottom. So there's a second entry. We broke out over here, pretty good breakout, 4 bull bars, and then we have a high 2 pullback, 2 bar reversal. So a reasonable breakout pullback long, betting on a channel up. Again, a bull trend and 3 pushes down and 3 pushes up. As soon as you see 3 pushes up or down, you should think of it as a triangle. Doesn't matter if it has a great shape or not a great shape. Functionally, it's the same as a triangle. All triangles are tight trading ranges. This one is fairly tight, and it's confusing when you're at this point in the day. You're saying, I don't know what's going on. This is a confusing situation. It might break to the downside, it might break to the upside. And there are also many ways to label this. There are many ways to label it to try to highlight the existence of a triangle. You can buy the reversal up at 2. You can buy the reversal up above 3, looking at 3 pushes down, 1, 2, and then this bear bar, 3rd push down. So this bull bar is a buy. You could wait for the breakout and buy this bar. You can buy above the pullback from the breakout or above this pullback. Okay, so here we have a bull trend, a strong bear spike, and a triangle, and it's confusing. 3 pushes down, 1, 2, 3, so it's a triangle, and the market's in breakout mode. It broke out here. You can buy above this bull bar. It's a reasonable bull bar. Pretty good buying pressure. Maybe we'll test the bull high. We have a breakout, and then we have this bar for a failed breakout. Traders are going to look at this breakout, these 2 bull bars, and they're going to weigh it against the strength of this failure. To me, the breakout looks stronger than the signal bar for the failure, so I'm expecting the failure to fail, and I'm expecting the result to be simply a pullback from this breakout and a buy signal. And here we have 2 sideways bars, a bull inside bar closing near its high. To me, this is simply a pullback from this breakout of the bull, for the bull breakout of the triangle. So this is a breakout pullback buy. Market went up, formed a large higher high major trend reversal, sold off, and tested back to the apex of the triangle, which is common. Expanding triangle, I talked about them in an earlier module. All of them are major trend reversals. The second, third, or fourth leg always breaks the trend line and usually tests the moving average, or comes pretty close to the moving average. Even if the trend line break is not very strong, if the signal bar is good and the context makes sense, I would trade it like a major trend reversal. We have a bull trend, a push up, a second push up, third push up. So you can view this as a major trend reversal, even though it has this very strong bull breakout. This could be a buy climax. So I would still treat it as a major trend reversal, a higher high major trend reversal. If you wanted to, you could wait and short the lower high major trend reversal. Second push down, either the second push or either the first push down or the second push down breaks the trend line and below the moving average. Here's that same chart, but labeling it in a different way. There are usually multiple ways to label it. This gray line is how I had it labeled on the other chart. You can also label it as 1 push up, down, 3, 4, 5, and you have a higher high major trend reversal, an expanding triangle top, looking for 2 legs sideways to down. Remember, the original labeling was this gray numbering: 1, 2, 3, 4, 5. Another way to label it: expanding triangles often grow into larger expanding triangles. So instead of 5 pushes, you'll get 7 pushes. So we could come down here and go up above. Okay. All expanding triangles are major trend reversals. This is obviously a major trend reversal: bull trend, trend line break, and higher high major trend reversal. But it has a problem. The break below the bull trend line is only 2 bars. That's usually not enough selling pressure to look to short a major trend reversal. However, if you view this as an expanding triangle, 1 push up, 2 pushes up, 3 pushes up, a low and a lower low, that is enough to erase the lack of bear strength here and make this a reasonable short. So here the lines are drawn and you can better see the expanding triangle. So even though the break below the trend line and the moving average is only a couple of bars, given that it's an expanding triangle, it's a reasonable short. The expanding triangle is more important than the lack of selling pressure on the bear breakout below the trend line. Same chart, and expanding triangle tops are usually followed by expanding triangle bull flags. So we had 3 pushes up, 1, 2, 3, and 2 pushes down, so an expanding triangle top. And now we have an expanding triangle bull flag, and the target is a new high. We have an I pattern, 4 consecutive inside bars. This bar is inside that bar, this bar is inside that, this bar is inside that, this bar is inside that. Breakout mode situation: a bull signal bar for the final bar, a reasonable buy above for a test above the top of the triangle. It's an expanding triangle bottom, right? So it is a major trend reversal. Remember, every expanding triangle is a major trend reversal. But you look at it and say, well, where's the trend? I don't see a bear trend. Don't forget that there was a bear trend here, and this entire rally was a breakout above the bear trend. And this expanding triangle bull flag or expanding triangle pullback, whatever you want to call it, is also a higher low major trend reversal. All expanding triangle bottoms are lower low major trend reversals. 3 pushes down, 1, 2, 3. Does not matter that the line is not perfect. We broke above the trend line. Usually leg 2 or leg 4 will break above the trend line. Here's the trend line, and break above the moving average. And then the new low forms the buy signal for the lower low major trend reversal. We have a bull body, and that makes the likelihood of a successful trade higher. The worse the shape, the less reliable the pattern. The closer the pattern is to an ideal shape, the more likely it will work. The less it resembles the ideal, the less likely it will influence what follows. Bad-looking patterns work no better than no pattern at all. So you can call this an expanding triangle. We have 5 pushes down, up, down, right? But the distance between 5 and 3 is great compared to the distance between 1 and 3, and that usually means that whatever was taking place here has very little influence on what's taking place here. So I would not look at this as an expanding triangle bottom. Okay, bad-looking patterns are useless. If we reverse up here, it's not because of this expanding triangle. And that is the end of the module on triangles.